Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
The information discussed on Beyond the Trade is for educational entertainment purposes only. Nothing you hear on this podcast should be taken as financial advice. Always do your own research and consult a licensed professional before making any investment decisions.
Welcome, everybody. This is Adam Sliver Trade. I'm here with one of my best friends, world-renowned trader Acrotech. You can call him Mike if you want to. The man, the myth, the legend. Mike, how are you doing today?
What's up, buddy?
I mean, we're here to talk about some trades, and
We are.
we have not been in the shadows. We have been large and in charge, but now we're here back ready to do a nice educational podcast. We're excited.
Yes, sir. Yes, sir. We've been talking about this for a long time. And finally, today is the day. Episode 1.
I know. I was shooting for March of this year, 2025, but now we are in September 14th, 2025. A little bit behind schedule, but we'll take it.
I just kept sending you checks. You kept cashing them. And finally, you said, all right.
Well, he kept sending me pictures of his new car and his freshly done garage. I'm like, how do these things even get financed? And so that brings us to how we've met. I've been a trader for almost 10 years now. I've been an educator in the option space for a while, and Mike was somebody that I ran into along the way, and it's been just a pleasure being a friend of yours.
No, thank you, man. You got me started in options. I knew nothing about it. I joined your group on the league, and you created a monster. So yeah, how did the car in the garage come about? That's 100% from earnings on trading options. So it's actually, I guess, in some way, your car in your garage. God, that sucks.
Well, I haven't even seen it aside from photos, but I'm in Texas, Mike's in Tennessee, so we're a distant but not too distant. He's just so you know, Mike, you're a pinned contact on my phone, and you have been for months. You know that, right? On my messages app.
Wow. Now I'm special. Now I'm
Nine
special.
nine very special people or groups, and you're one of them. So Mike, for context, Mike is we've met in person, but Mike has been a huge
Yeah, we met
supporter
that. What was that? 4 years ago, three or 4 years ago now. I had a
at
conference down in Texas, and you were kind enough to come down and spend an afternoon at the pool, putting a face with the name and all that good stuff. But no, I mean, for me, I've been trading on and off mostly. Gosh, go back. I'm early 60s, so I've been doing this since my mid 20s. Never as a serious trader by any means.
we're talking serious.
Yeah, serious trader. It's been. I mean, let's be serious about that, and it's been since COVID, right? I mean,
And
COVID drug a lot of people out of the closet and into the stock market for
I
good or
feel like I
bad.
can continue to talk to more people every day that that started during COVID, and it brings up things like Open Door. We'll get to this stuff. We've got a skeleton of kind of what we want to talk about. We're going to navigate through it. This is going to be a great time. We aim to grow this. This is probably a weekly show, and it's for fun. I love Mike, my brother, and this is fun for us, so it ain't a chore.
Right back at you, man. Right back at you. Yeah, I
Well,
think
let's
this is kind of a rough draft. We've got an outline of what we want to go through, but by all means, as we gain listeners and followers, any ideas, but be sure to mention them. We have a account set up on X. We'll be posting this to pretty much any forums we can find: YouTube, Spotify. What else do you have in mind?
I mean, regular podcast app. We're also going to put it
Yeah.
on YouTube. Speaking of, Mike, I think our emblem on the video is not centered. Maybe try to center it on your screen if you can.
Well,
Um,
dang it.
Regardless, it's insignificant. Um,
It's the first run.
But I think first we should get into a little bit of the market ahead, a little bit of the week behind, but clearly this is an important week. We've got ideally our first uh, Fed rate cut in quite some time. We're
This is going
looking
to be a
at,
crazy week, man. It's going to
yeah,
be nuts.
I mean, the meeting on the 17th, so 3 days from today, that'd be Wednesday. We've got currently, or I guess how it closed on Friday, is a 96% chance of 25 bips and about a 4% chance of 50, which, where do you stand on that? I doubt it's 50.
Yeah, I would be absolutely shocked, as I think the rest of the market would be too, and that would create a lifetime memorable moment, I'm sure, if that happened. I
I
think,
mean,
yeah, I don't see anything more than a quarter.
I agree. And I think the existence of a cut regardless was it needed to see we needed to see bad jobs data, which we did. I forget whether that was last week or the week before. And then
Yeah, I think
inflation
last
needed,
month.
yeah, inflation needed to be limited, cool-ish or in line, which it was. As long as there was no alarm with inflation, and then jobs continue to present an issue that obviously this data is backwards looking and it's not even perfectly accurate. And so when you're inaccurate, probably not timely data is showing a problem, it would be,
Hmm.
and this would be pretty much a guarantee. But I hate saying the word guarantee, and you're never supposed to say that anyways.
Right, right. I mean, we know the political aspect of it and that side of we've got the Fed leader and the leader of the free world at bumping heads with each other, and they're both stubborn men, I'm sure, in their own way. So who knows what's going to happen? I really don't see much more than a quarter point. And the question I have is it already built in? The way I was a little bit removed last week at a conference, so I didn't really get involved in the market too much. But seeing where it ended up, I mean, my God, everything is at the top. And is that the built-in, or is it going to rocket from there? I mean, that's the question for me at this point.
It's a great question, and personally, I think a lot of the market, all-time highs type of thing is obviously due in part to your Mag 7. All of them, each of them have some component of AI in their business. And I mean, maybe you can throw Oracle in there now to be, I mean,
Yeah, yeah.
we'll talk about that. But yeah, I think you're looking at the indices and everything's at all-time highs. You can attribute that to their heavy weight in the S&P 500 and, NASDAQ as well. So I'm a big fan of the AI trade. I think the market is in early innings. I think we're in inning 3.5, or to four. I think that they're building. I mean, anytime you see 96%, you can assume that it's priced in. And personally, that's my thoughts. And I do real estate. I do stay very knowledgeable in the real estate space, and everybody in the capital markets seems to be expecting a cut, and your forward curve is expecting a cut. So I think pertaining to the market, I think we might stay flat. I think it really depends on what Powell says.
That's probably going to be the key. And he's coming up on, what will it be? He'll have two more opportunities or three more opportunities to reduce before he either gets replaced or replenished in that role.
He will, yeah. I mean, our president has already said that
Yeah,
Powell will
pretty
be
much.
out. I think it's Q1 of next year. I may be totally wrong, but I
I'm
think,
pretty sure that's it.
yeah. So he has 3 to 4 more opportunities.
So yeah, I mean,
Um,
it's as far as the pulse on the market. I think obviously Fed rates are going to be the driver for this coming week.
yeah. Yep. Do you think that there's still upside?
I do, especially when I look at some of the individual stocks, and there's some that are still down. That some for no reason it seems, and some for good reason. But they seem to be turning around. United Healthcare, I mean, it's at a 5-year low,
Yeah.
and it's one of the largest healthcare companies in the country. And I played that a couple of weeks ago. And I mean, honestly, I made so much money on it that I sold it early because I just took the money. And I look at it now and I'm like, I kick myself. I'm like, God, I would have been up 400 or 500% on those options.
I
But
mean,
take your money and run, folks. Don't let it linger.
exactly. I mean, I always tell friends, I tell family, I tell myself, you'll never go broke taking profit, and there's
That's
always
it.
the woulda, coulda, shoulda. We all deal with it. I deal with it. It's just,
Hmm.
and then you're
I
doing
had that
math in your
happen.
head.
Yeah. I bought AMD. I think it was Monday. I left Tuesday to go to a conference. I bought them either Friday or Monday. It had a huge run. It was up on the options. I had like $1,800. I'm like, oh, these are end of October options. I'm just going to let them go. And Tuesday or Wednesday, it's back to up only $200-300. I'm like, crap. I should have just taken the money. I could always get back in, but I knew I wasn't going to be able to watch the market for the rest of the week. So I figured I locked in some profit on it. If it went back to where I bought it at, I'd be okay. But yeah, there's some crazy ones out there. AMD's one, United Healthcare is one. Hims, I'm getting more confused on that on the day. I've been playing that on and off for 4 or 5 months now. It had a great week, so I made a lot of money last week and never placed a trade, which was awesome.
Yeah, Mike, if you wouldn't mind, share your trading view screen and maybe walk through what you thought on that AMD trade and that HIMS trades, um, and kind of talk a little bit about what are entries, and make sure you're saying the numbers for just audio folks. And I've got a couple too. So
Okay, AMD. Let me get to the daily. Well, it had its big drop, and I don't really watch it that often, but as I do, like on Sunday nights, I'll go through and pull up all my favorite charts, go through and look for biggest gainers, biggest losers, who's trending where, and AMD was definitely down in the dumps. It started in April, but then it took a big shot. It went up to its high, looks like mid-August, and when I looked at it last week, it was down substantially.
yeah, are you able to pull up your screen, Mike?
Get it on here.
Yeah, obviously April was a very, I mean, it was a huge opportunity for anyone to jump into the market, and hopefully you deployed money. I mean, that I started tweeting again around that time because I literally could not help myself. Trump had orchestrated one of the biggest buying opportunities in the recent past. I mean, when you look at a flash crash almost like this, I mean, first off, it was the descending of fear, right? You look at AMD and you see that back in October of 24, it was about 175, goes all the way down to the 70s, and
Exactly.
when that panic set in is when I think I tweeted Soxel SOXL, highest volume day ever. If you wouldn't mind pulling up SOXL, this is again not financial advice, but this was a trade that I took once I saw that high volume, because uh, when somebody's selling, there's always somebody on the other side of it. Somebody has to be buying it, and so when I look at all that volume down there in the eights, I was buying. This is a triple leverage semiconductor ETF. Risky, obviously. I don't really have thoughts on it right now, other than just holding my position. But when everyone was bearish on semiconductors, just like your United Healthcare call, and I want you to walk through your entry and exit there. Whenever Max Fear has said it, actually, I tweeted about UNH too. But whenever Max Fear sets in, that's the time to strike. Look at that.
I mean, that's incredible.
Warren Buffett. Warren
Yeah.
Buffett saw it too.
Yep. I was originally in it like back in here, which was what is that? February. It was early in the year, I played it a little bit, but it had some ups and downs in here where it was just chopping me up on options, and I didn't go out far enough. So made a little bit of money, got out of it, and I kind of just stopped looking at it, to be honest with you. But you look at it now, and it has just now gotten halfway into that last gap.
Mm-hmm.
I mean, it's at what is it? 352. 378 is the top of that gap.
Yep. That's, I mean, I would say a magnet.
Yeah, but then you look at the next one, and it's like, I mean, the stock was it was $600,
Right. It's a
and
too big to
what?
fail type of
Yeah,
situation, really.
yeah. It was some panic sells, and but it's I mean this one I think has got a lot of juice left in it. I really do. I will
When
probably put this at the top of my list to watch this week, and we'll get back into some options on it. In my for those listening, my options when I started, of course, I was the zero DTE guy or buying a weekly, and I quickly learned that that will make you go broke really fast. So most of my option trades nowadays are going to be at a minimum they're weeklies. Even on SPY, if I'm trading SPY and it's Monday, I'm buying Wednesday or Thursday. If it's like UNH now, I'll probably buy end of October. Would be probably pretty good right about now. I might push some out to November, end of November, and I'll usually buy end of the month calls or puts, whichever direction you're going. But yeah, 30 days to 60 to 90 days is kind of it's a sweet spot I found based on my trading strategy. So I very rarely are buy, but doesn't mean that I'm buying 60 days out. I may sell them in the same day if I'm up enough,
where would
and
you
it
look?
happens.
Where would you look to, in theory, enter on here for you to initiate a trade here this upcoming week? Where would you try to enter, and what would you enter?
I would look for it to be as close to 350 as possible. And we'll see what tomorrow morning brings, but it'll be the first one I'm looking at in the morning. And I think my target on that would be that 378.
Right.
So you've got a $28 spread there from entry to where you would get out. I would probably look at buying three, maybe 355, 358 calls, and I would buy those for a minimum of end of September.
Yeah. I
Um,
think there's even room to probably the very top of that May 13th candle, the very top of that wick, which would be exactly 342. I think you
yeah,
could potentially get if you put extended hours on, you probably get a little more precise, but I think if you're getting in the mid to low 340s, it would also line up with your exponential moving averages, the ribbon there.
let's look at it on the hourly. I should bring up that'll bring up
If you go back to May as
after
well.
hours.
Yeah, I mean, that hourly does look like it's in a constructive pattern, but on the daily, it does look a tiny bit overextended. So I
Yeah,
think,
I mean, on the bottom of my screen, this is again one of the key indicators I use is RSI. Um, but on the hourly, yeah, it looks like it's taken a big dip. But if you look at it on the daily, the RSI is already indicating that it's way overbought.
yeah, I would
You know,
agree.
I don't put as much weight on the daily RSI. I typically play RSI on a 5 minute chart
Hmm.
because I'm day trading a lot of it. I call it day trading regardless if I'm 30 days or 60 days out. If I can buy it this morning and sell it at 30, 40% in the afternoon, I'm out.
Exactly, man. And I've been doing a little bit of day trading on these recent IPOs. There's been a little bit of heat on the IPOs. I played Klarna, which was kind of an underwhelming IPO. So the ticker KLAR kind of sold. I think the price was $40. Briefly tapped 57, went down into the low 40s pretty much right away. I clipped a tiny bit on that. I didn't get a huge allocation. I've noticed that whether you're doing it through Robinhood or Webull or SoFi. I do use SoFi nowadays. I actually really like the platform. Sometimes you'll get about 10% plus 9 shares. So, for example,
Yeah.
if you put in for 100 shares, you'll get 19 because it's 10% plus 9. I saw that all over X, and I was like, I don't know why that's such an odd formula. But anyways, yeah, I also played Gemini's, Gemi. I played that. That one halted up once. If you go to the 1 minute chart, um, it halted up briefly there. You can see it at about 44. So, anyways, quick little day trades on that. But for me personally, I've had plenty of options experience. I've traded every option strategy you could imagine. Win some, lose some. Now I'm pretty much focused on long-term equity holds. I'm buying growth companies that I like in industries that I think have a lot of runway. And personally, that's I buy into the AI future. I think that in order to facilitate what everybody's envisioning for AI and the eventual productivity, you need a bunch of data centers with a bunch of GPUs in there, and they need to be running efficiently. And you can go down the entire food chain on that. But my biggest holdings right now I've held Applied Digital, APLD for since about 10. I wish I got in earlier, but I waited for it to come down significantly and form a base after uh, type in APLD.
You mentioned AI, and I was looking at this one earlier today, the C3 AI.
Yeah,
When I
was
say I look for ones that are trending down,
man.
look at that. I mean, this thing is set up. This is a setup that is, again, this will be on my list for this week to keep an eye on. I started doing some research. I'm not done with it, but I want to say they have a new CEO. There's been some changes there. They missed on earnings, but that's quite the dip
It's forming
in a time when they should be at all time highs.
it's forming almost the exact same pattern as it did from April to May. Look at that.
Yep.
Very similar.
And not to cut you off on that, but when you mentioned AI, I'm like, oh yeah, I forgot about this one. I didn't have it on my notes, but
Oh, you're good, man.
interesting.
Again, this is there is no agenda here. We're just here to. I
Yeah,
mean,
hey,
this is an excuse for us.
you see my crazy list there on the right hand side. A lot of those shouldn't even be in there. They're something I may have played 3 years ago that I never removed from that list. But this is kind of my daily list that I go through and look at gainers, losers. If I look them at on the weeklies, and there's probably realistically only 15 or 20 stocks in there, and I probably realistically only play a handful in the last year. I
But
find the
it's
ones that work for me, and I stick with them.
and you learn the personality of the stock, right? And
Exactly.
that's we can maybe save that for education corner, but yeah, I mean that is learning the personality of a stock that you like and understanding its movements is
Yep.
it's honestly it brings peace to you because even maybe on a 5% red day, you're not panicking because you know that that's part of what that stock does.
Exactly.
Like
I
you,
mean, that's mine for the week. My hot tips are UNH still, HIMS, and this AI one has been added to my list. Those are the three that I'll be looking at, and then kind of waiting on to see what happens with the Fed rates. What's your take on the week?
yeah, for me it's Applied Digital APLD, which has been a holding of mine, but I trade around a core. I continue to add over time. I might so
My goodness, if you've had that for a while, somebody's doing good.
so if you look back in July, I was buying. So in June, the beginning of June is when this is a data center company. They own or they're building data centers in North Dakota and Ellendale, and they are, they have apparently a very efficient build time. I think they say like 18 months they can have a full data center built out
Wow.
and ready to go. And so they're delivering their first, they say they're delivering, don't quote me, their first data center for CoreWeave. You see that June pop was when they announced a deal for their first 250 megawatts with CoreWeave. And they agreed to
Okay.
that deal, and it was a $7 billion deal. And then back when they had earnings, which was at the beginning of August, so I bought that dip down into the tens. I bought it pretty heavy. I bought it when it pulled back, when it went up and it pulled back, and then I bought more right before earnings, which it actually got below 10 there. That earnings, they announced that,
Before earnings like 979.
yeah, or in that area. So my average is like 10 to 11, but I keep adding, right? So it ends up going up. But in that earnings release, they reported they're doing another 150 megawatt add-on with CoreWeave. So the CoreWeave and APLD are in bed together. CoreWeave is an infrastructure play, cheap, and efficient data centers. They build them, and then they intend to become a REIT. So this may
Okay.
be a dividend-producing stock someday. So it's kind of it's a long-term hold for me, um, assuming that they do what they say they're going to do, which is deliver a data center with it, on time in October. They said so, really soon.
Interesting.
And then I also own CoreWeave, so I'm kind of on both sides of that. I bought the
Okay.
dip. I bought the dip back in the 90s. CRWV. Uh, I bought the dip in the 90s, low hundreds, and it's up about 110 now. Hit 125. Had a big jump off of Oracle's earnings. So that's it for my upcoming week watch list.
Data centers are interesting. I mean, they're obviously they're the necessary evil. I get involved here in my town with our city council, and we just had a big data center try to get us to change the land restrictions on a piece of property, and they want to build a big data center. And you'd be surprised how many locals showed up to protest that one. It has to do with the amount of water they use. Um, it's our electricity grid, and we're on Northeast Tennessee. We're a TVA, Tennessee Valley Authority, so our electric is literally provided by the federal government through a dam project, and three or four big data centers like that would just kill it. It would overwhelm the grid. And there's a lot of concern about, what's it going to do to the aquifer, how much water. What I get interested in when I see this is companies that are talking about recycling the water and building these mini nuclear plants on site. Of course, everybody's going to have a problem with that too. I don't want a nuclear site in my backyard. So I think
Yeah,
the data centers are going to have some issues in certain areas. Rural areas to me seem to be attractive, but I mean, you go out to the middle of the desert in Arizona, you don't have water.
yeah. I mean,
What do you do?
it takes a lot of convincing with the jurisdictions, I'm sure, and
Yeah,
you have to be super nimble in this trade, and any AI trade, because these things can happen. Laws can change. They bear a good amount of risk, and particularly for a real estate one. I mean, and for both parties, APLD and CoreWeave. I mean, or any of them. Oracle. Um, and any big AI name, they have some execution risk. They're
yeah.
also, I mean, Nvidia's earnings were kind of lackluster, I would say, and Oracle kind of saved everybody. Nvidia actually had less data center revenue than anticipated, which was still what, 44 billion or something. 40, it was 44.1 instead of 44.4 or something like that. I'm like, oh man,
Yeah,
oops.
details, right?
But still, people read into all of that stuff, and semiconductors
Okay.
are not done in my eyes. But
Oh
uh,
no.
what do you give us kind of a educational talk now, Acro?
I mean, that's a hard one because there's so much out there. Then I touched on a little bit of it. I think if anybody that's new out there, or they're struggling with options, and that's really what I'll speak on because that's pretty much all I do anymore. the number one thing I can tell you is, depending on the size of your account, if you don't have a lot of money in it, size down and buy time. You will be surprised, and track your trades, track your win lose rates, track your percentage of gains losses on each trade you take, and put it in a spreadsheet where you can look at it and make some sense out of it. Um, I have paid trading tuition for 5 years in a row, and this year I bought a car, pretty nice car, and spent a lot of money remodeling a garage, and it all came from trading options, from correcting all the mistakes. I'm finally paying myself back. It takes time. It's not, I mean, it's mental. It's, you can think you're there, and first thing guys do is they add more money to their account, and they get into bigger, instead of buying 5 contracts, you're buying 20. It's a different game. It mentally will challenge you, because nobody likes to take a loss. You start chasing losses, averaging down, and that is a death wish. That would be my number one advice: is take it slow, learn a stock, learn the options, buy a little bit of time, and track your trades and see what happens. My guess is you'll probably do better if you're playing zero DTEs or weeklies. You'll do a lot better by sizing down and buying end of month calls or puts, or whatever your taste may be.
Acro, what's your stance on taking losses? At what point do you realize that something isn't working?
So what really changed my trading was I came up with, I have rules that are non-negotiable. And it'll depend on the stock, so there's a little bit of fudge in there. But if I'm down 20% on a trade, I don't care if it's 5 minutes after I took it, or end of day, next day, I'm cutting. If it's something that it's okay, it's back at a level that I think it's just a rebound, I may let it go 25, but I have not taken a loss more than 25% all year. That's my rule. I
I
don't care
think
how much money is in there. It's 25%, and I'm done. I'm out. I can always buy back in.
And especially on a dated option, you've got multiple weeks on there. 25% means that you are probably
Exactly.
a little a little bit too wrong. Um,
Yep.
as
That's the
far
thing. That's the hardest thing, right? I mean, you don't ever want to admit that you're wrong.
Nobody
We
does.
think, yeah, we think we're learning. We're killing the market. I'm not wrong. It's just, I entered too soon, but it's not the case. And everybody's wrong. There's things that happen in the market that will make a stock change in a heartbeat. There's a Google that has this massive candle like once or twice a week with millions of shares sold in a 5-minute candle. I thought it was a glitch, but it's happening weekly.
Yeah,
It's
I've
something is
noticed that
going
as
on
well.
with it. But if you have a stop loss set, it's going to rape you. It's going to take your money, and you're going to get stopped out, and you're gone. I mean, the thing is, it's stocks. Depending on the one you're playing, it's Tesla, volatile. It can make big moves in a hurry. SPY, yeah, you get the big death candle or what have you. But if it's something out of those big players, I mean, 20% is my limit. I'll keep watching it, but I may get back in that afternoon.
This kind of also brings me to entries. And a question that I got recently was, how do you know when to buy something? I could go on for, yeah, I'm looking at Google on my screen too. I mean, I could go on for days talking about why I would consider buying something or how, but I think the primary reason is fear. If you sense fear, or I mean, reasonably, the company has to be one that you believe in, not Party City, who's going out of business and has awful
Right.
awful financials, right? That's disclaimer. But if you sense fear in the water on a company, it may provide the right opportunity. So a couple of recent examples is Google on June 23rd. I think this is when, or June 20th, Friday, they Tesla had announced their robo taxis coming out, which I believe impacted Google in a 4% type of way, because they own Waymo, which is the other robo
Yeah.
taxi group, and that I thought that that was unnecessary, and so I waited for it to get to a certain point there about the mid 160s, and then I saw the candle on June 23rd, which was a recovery candle. You see a long wick on the bottom, then price closed right at basically where it opened. Means it retraced that entire move. That is a buy signal for me. I tell people when the market is begging you to buy, you buy. If you're
Yep.
trying to force it, it's probably being forced. Right? You just if you feel like you need to make a trade, then you're probably forcing it.
Yeah, and that was the thing last week. So I went to a conference, was not really able to trade Tuesday through Friday. Yeah, I looked at the account here and there, but I had set up my account with, let's see, I had AMD, HIMS, and on HIMS is a little different because I own a large number of shares. So I always take a portion of those and I sell covered calls. But HIMS had a great week. So, I mean, I was having pretty good days 4 of the 5 days last week, and I never placed a single trade.
Sometimes no trade is the best trade.
Yep. It
Are
is.
they
But like here's an example on that Google. I mean, look, this is it's a closing candle, but look at the volume that brought in on a 5 minute candle. It's incredible. And then it was doing that here. Look at this day. Look at the wicks on some of these. They're insane.
noticed that particularly on Google too? I no clue why it is, but somebody
They were
is
happening
just
regularly on a Friday for some reason. I'm like, man, somebody hit the wrong buttons.
somebody fat fingered it.
Yeah. I mean, there's another one right there. Look at that one. That is a massive amount of volume, and I'm thinking it's a glitch, but I look at it on 3 or 4 different systems, and it's showing the same volume. That's
mean,
a million plus
the
in volume in one 5 minute candle there.
I mean the bid is strong. Obviously,
Yeah,
this thing went nuclear. Another example for me
there's
personally,
another one. It's crazy. But anyway,
is that a Friday? Monday. Interesting. Another example of one that kind of begged me to buy, or anyone to buy, was Palo Alto Networks. It's kind of the big giant in cybersecurity space, but they announced a merger.
PALO?
No, it's PANW.
PAN.
They
Okay.
announced that they were purchasing another company, and it was with shares. If you go to the daily, it tanked. A stock for stock merger, and was that recently? No, go to the right. That's when Pelosi bought there in March. But yes, right here,
Pelosi factor.
right here. So back in the 170s, I thought to myself, I said, I think this is overdone. They have earnings coming up. You see that little E at the bottom? They had that's the end of July, panic selling because I think maybe this merger was not seen as accretive, and then you also look at the inverse head and shoulders that's being formed from the beginning of 25 as one shoulder, the April move in of this year as the head, and then the other shoulder. I was like, okay, they have earnings coming up. They announced this before earnings, which is a little bit strange, but I think they're going to talk about the synergies and gas it up during earnings. Sure enough, look at that. It has not gone back to the 170 cents. Maybe it does. But regardless, if you see the vision beforehand, think through why did this company issue this press release? Kind of try to get in their mind. And they obviously have their math as to why they're doing this deal
Exactly.
behind closed doors. And so they think it makes sense. And obviously there was a big sell-off. You see this potential formation happening. And if you find that support, you see that support in that low 160s range, buy into it, and
Yep.
that's
And
another
this
buy the
one,
fear.
I don't think I've ever played options on it, but my first thought is there's probably a pretty good spread on options on Palo Alto.
You're right. You're correct.
So I mean, for anybody that's not been at it a long time, that's a reason why I would probably never trade this with options because of the spread, unless I really had some strong indicators that man, this thing is going to go. because that spread can kill you. You buy it, you go back to your screen, and you're down 20% already. The thing didn't even move.
Yep.
But
It
you got
be
so you can't play options on every stock. That's for sure.
Always be aware of the bid-ask spread. Sometimes that spread can be 10% of the whole option. I mean, if you're buying a $2 option and the spread is bid 190, ask 210, be careful and always bid the mid. Just be careful. Because when you're selling, if you try to sell the mid, it's not a guarantee that you're going to sell it. I generally would try to sell a little tiny bit below the mid. Maybe if the midpoint is 2, I would probably go 197. You're giving up a little bit. Great point though, Acro.
Man, this is fun, huh?
I mean, we
I'm
should
having a blast.
we should do this every week.
We should do this every week, man.
And just celebrate and new Camaros for everybody. How about a Lambo? when Lambo?
I don't do Lambos. I don't do those Italian fancy cars, man.
Yeah, they're not for you. I'll pass.
I'm a class dude. I'm 61 years old. I'm a classic car guy.
Classic
anything
man.
in the 60s, anything in the 60s, early 70s. I'm all over it.
Oh man.
So yeah, for the record, it was a '68 Camaro I bought, completely 100% restored, absolutely beautiful car. Took it to its very first show, which was at a Ford dealership, sponsored by a Mustang club, and the '68 Camaro wins best of show. Yeah.
Heck yeah.
No,
Do you ever
no
drive
offense
it?
to any Mustang fans out there, but
Do you ever drive it?
yeah, I drive it a lot.
How many miles?
Well, since the restoration, it's got less than 15,000 on it.
Not too shabby.
No, 383 stroker, 550 horse, 5-speed Tremec transmission, 488 rear end and a gear. It's a goer.
I did not know that this was a automobile podcast. There's too much
you can make
bragging.
money trading cars too. You can make money trading cars.
Yeah. Okay. Give me a hot take.
I'm a little reserved this week because of the rates, but I think the two that will be on the top of my list come morning is going to be United Healthcare, and I have to give serious consideration to AI, although I think that one might be a little premature yet. But United Healthcare is my pick for going into this week.
My hot take, I would say, is I think the IPO market is going to struggle a little bit in the near term. I think too many companies are going public at this time, which is almost, reminding me of 2021, where a lot went straight down and have since to recover. I mean, you look at Snowflake, you look at Coinbase, which is kind of right around that area. I think probably a peak time to IPO was last year. I think Reddit had an incredibly good IPO, perfect timing, pretty much right at the bottom. Of course, it depends on your industry, but I think some of these IPOs, just because I've been playing them, I think some are just going to go straight down. I think we're seeing that again. And to me, that's almost symbolic of 2021. And then you Rivian, Coinbase, all of these, which that doesn't make me feel particularly good about the stock market, right? I mean, if you go to April of 2021 is when Coinbase IPO. This is just, an example. Of course, SPY's way above April of 2021, but, Snowflake, still struggling. So I think the IPO market might see some pressure. I think things are coming out overvalued.
Yeah. You mentioned Rivian. That's one I've been seeing a lot more chatter on lately, because they've got something like $10 billion in cash, and they're going to be opening, I believe, their second factory here before the end of the year. There's a lot of speculation that stock can take off. I mean, I've never played it, but it's relatively cheap right now. It might not be a bad one to throw a little bit of money at to own some shares.
The only thing, I'd just be careful of bag holders. There's obviously a lot of people who are holding significant losses, given that this went straight from 110, I guess. I don't know what the specific IPO price was, but there are people sitting at 90% losses, and maybe. But there is a I can see a curl happening, but that you bear a lot of execution risk if you get into a stock like this. But I do see the volume there, Acro. There's a
That's
there's potential.
yeah.
Throw it on a logarithmic chart though. Hit the gear in the bottom right above ADJ. The gear and the gear. No, down to the left. Go to 40 right there, right there. And then go and click logarithmic, which is right above move scale to left. Up there, down, there.
I can barely see
So
it.
and then zoom out to the weekly chart. So logarithmic charts really just I use them on everything because it throws everything. I don't know how to explain this the easiest way, but it allows you to kind of picture everything in in one scope because if you're trying to look at intricate price patterns of something that was at 150 years ago and now it's at $13, you're not going to be able to see them because they're on different, percentage scales. Like 10% of this stock right now is $1.30. 10% back then was $10.
Gotcha. That's a
So
good tip.
I keep it on. I keep my chart, especially when I'm zooming out. I keep everything on a logarithmic scale. If you're gonna go look at Nvidia, it's impossible to see the price patterns. Or Tesla, perfect ones. Throw it in a logarithmic chart and throw it on the monthly, and zoom out and see the patterns. Throw Tesla up there. So and
Does it automatically reverts back? It keeps that setting now.
yeah, so if you look at the price scale on the right, notice how some numbers are bunched together and because
Gotcha.
it's that logarithmic. So zoom out as much as you can, and you'll see like Tesla is forming a similar pattern that it did back before it ripped to the to right. So it's forming.
Okay. Same
Yep,
thing.
same exact thing. It's doing the same exact thing. So you can tell when Tesla finally breaks out. No idea when that's going to be. Maybe it's happening now. I don't know. But it's going to do one of these 10xers. Nvidia is a similar case. So anyways, if I'm analyzing patterns, I'm trying to take the percent gain mentality out of it. But if you're looking at something like Rivian, it is very important to know there are going to be bag holders up there.
Yeah.
That's kind
Good
of the.
point.
But yeah, I tend to look at longer term charts on a logarithmic scale.
Cool. That's a good tip. I've never played with that.
When you
I will
spend.
add, when you mentioned IPOs, one thing I forgot to talk about, and it's not even on my list, is I bought a pretty good chunk of Fannie Mae about a month ago.
Yeah.
And you're in the real estate industry. They're talking about it being the largest IPO in the market history, with only 5 to 10% of it going up to be available, which I find absolutely mind blowing. But yeah, I bought a bunch of it. I'm sad to say that I owned 14,000 shares of this after the housing crash that I bought for pennies, and I kept it for probably 7 years, and it just lost money, and I sold it all.
Wow. Is Trump taking this public?
Yes, and the announcement last week, which also helped it go crazy, was that it's going to happen sooner than later, and they expect it now to IPO before the end of the year.
Wow. I'll be tracking that one. Huh. Cool. Yeah. So I mean, I'm focused on semiconductors, tech, data centers. That's kind of my wheelhouse. I like trading UNH or other stuff. Like UNH, but my focus is really on tech, on growth, on new things to the market. But I'm super excited for this week, Acro. I know you are too.
Oh
Um,
yeah,
this,
I'm probably going to sit on my hands a lot this week. We'll see. I mean, the United thing, yes, but as we get closer to the Fed rate decision, I will probably start offloading a little bit and being very careful and ready to go.
yeah, I think it'll be important to watch how different sectors um, behave after this
Yeah.
meeting. Again, I think the rate cut is kind of baked. And then I think it's really important to listen to what Powell says and don't just go on X and listen to and see the quotes. If you really care and you're really interested in trading and you're devoted, you need to watch the press conference and analyze it for yourself. Have an original thought. Be
Everybody on X is trying to sell you something.
be original.
And usually it's their bags.
right, right. Go up, Spy. It's impossible to be down on Spy right now, though. Pretty cool.
Yeah.
But yeah, be careful. I think be careful out there this week. Be nimble, and don't feel like you are required to take a trade.
That's it. There we are. All new highs. Crazy. All right, man. Well, I would say anybody again that's join us will what is our X handle? Let me bring it up. Let me bring it up and screen share it here real quick.
Drum roll, please. Drum roll, please.
Beyond
I think
the
it's
Trade
just
podcast. Switch accounts.
at Beyond the Trade, I believe. But like, subscribe. I see it. It's at Beyond Trade Pod, and we'll tag it here in the description. But like, subscribe. If you enjoy the content, please follow us, and we love audience questions. So feel free to submit questions,
There it is.
comments. Boom. Yeah.
Yeah,
So,
join up. We'll be making announcements there on the next one. We'll take any questions, any suggestions. I mean, we want to build this up to be something of value for everybody, and I'm excited about it. You got an options guy, you got a commons guy, you got the guy that taught me everything I know. I mean, what more can you ask for? And it's free. It's absolutely free.
yeah, this is going
Come on
everywhere, available to everybody, and just here to bring kindness into sometimes a dark industry. And
Yeah.
me and Acro
Well, I
are.
mean, and it's no BS. I mean, this is not pumping anything. We are not trying to convince you of anything. This is what we see, what we're playing, and probably moving forward. I mean, I'll be happy to record my trades and show entries and exits and the good with the bad. I mean, that's what it's all about.
Absolutely. So thank you all for tuning in. Appreciate your time and appreciate you supporting Beyond the Trade podcast. Have a great one.
Yeah. Till the next one, guys. Take care.